All right, everybody. So we have about 30 minutes left in today's session. However, what we do have is that of a relatively interesting candlestick. It is that of a one black crow candlestick. Technically speaking, it is the second strongest reversal two-day pattern that we have in the world of candlestick charting. So largely we have been expecting some form or at least a blended type of candlestick, whether or not it was that of a one black crow. It could have shown up as an engulfing candlestick, a shooting star. It could have been a bearish counterattack, a piercing pattern. However, they all add up to the same type of sentiment. What is essentially happening right now is that these markets are retesting that macro sort of support area that we have seen hold really for the majority of 2018. It has been a little bit vague as to where exactly that point was going to show up. However, it does look as though on the industrial average and relatively speaking on the S&P and the NASDAQ, that we are seeing it more or less show up between that of Friday's session and of course today's session as at Tuesday. Now, as it stands, we have about 30 minutes left in today's session. The market is, or at least the Dow Jones Industrial Average, is down roughly 400 points at the moment. And already we have given back all of the gains that we established on Friday and a portion of the gains that we were building into the close of last week. It did come as a little bit of a surprise. There goes my mobile phone in the background. To see this little stair-step pattern set up, we recognized it for what it was last week. But really what we were speaking about was that even if we did see a pop, we would begin to see this move begin to turn negative. And essentially what's happening right now as at Tuesday's session is that this is most likely going to be the beginning, all right? It's not only going to be today's session as at Tuesday, but it's most likely going to linger, continue, and retrace further back down to lower areas prior to, of course, the bulls, or at least the expectation of the bulls, jumping back on in and then driving this market to ultimately take out this little swing high that we have now priced in, all right, between Friday and today's session. So if you're sitting here looking at the markets, following along closely with the markets, we are moving into earnings season, or at least in our top 12 individual trade list, the majority of our stocks are reporting Monday week. We do have IBM coincidentally after session today. I believe it's being at least released as at 4:05 Eastern Standard Time. So we'll keep an eye on that IBM report. But as it stands again on the S&P 500, very similar type of candlestick, or at least it is that of a one black crow, the second strongest again reversal candlestick, and it is showing up at a logical area of resistance. The problem is, and I've been warning about this for a number of weeks, is that as the sentiment shifts, or at least as the market begins to turn, all right, and it does move temporarily bullish, there are going to be a lot of talking heads, a lot of audibles out there saying that this is the continuation of a larger bearish move, and that couldn't be further from the truth at this point. This is not going to be most likely a move that takes us below the swing lows over here, nor will it have, I guess, the endurance or the stamina to actually break below that of this primary macro bullish trend line on the S&P 500. So as long as we hold above roughly 2,400 on the S&P 500, this is going to be, again, probably most likely that last opportunity to really position yourself, if you want to, into SPY positions, into diamond positions, DIAs, or even the Qs to take advantage of that magnet on the markets collectively, which are sitting up at the all-time highs in the months of September and also October, depending on which market you are choosing to jump on into. So that's the way we're looking at it. It makes a lot of sense on a number of different fronts. I've spoken about this. Just the general sort of, the psychology and the sentiment of chart patterns. Generally what happens is once we break a level, we come back up and retest it. And we've been warning about this not only for a number of weeks, but also for a number of months. This is essentially now where a lot of people, unfortunately, are going to begin unwinding a lot of those original long positions. There's going to be aggressive shorts jumping into the market as well, adding to supply. It's going to drive prices down. Those who cannot hold through are going to panic. They are going to sell, probably at the most incorrect time, so to speak, where they should actually be buying or jumping or adding into new positions or adding to existing positions down at lower prices. Who knows, the S&P 500, it may drop to 2,500. It's not going to happen during Wednesday's session. It's going to be most likely a multi-week or at least a week sort of play. We're just going to have to monitor this as it unfolds, but please be prepared anyway, psychologically at least, for a lot of articles, a lot of people to suggest that this is the continuation of a larger bearish type of move. And I just wanted to stress the importance that that's just simply not going to be the case at this time. If you haven't already done so, please email me with any questions. Otherwise, jump into that pro analysis class. We've been talking about this for a number of weeks, And it'll really help you solidify the concepts of analysis, applying it, of course, to the markets, and also our individual top 12 trade lists. Now, just to quickly recap, all right, IBM is set to report earnings, as I have already announced, I believe at 4:05. So in about 30 minutes or so, that's going to be interesting to see what the outcome of that earnings announcement is. Pay attention, however, because I know my chart is very ugly. There's a lot of lines all over it. If you go all the way back to 1993, you can see that we are resting essentially on this bullish macro uptrend. So I'm expecting anyway, no matter what the report, the reaction to the report, I'm assuming it is going to either be slightly negative, neutral, or up substantially. All right, I'd be surprised if we see IBM absolutely getting, clubbed over the head after hours. Who knows? It may happen. Don't have a position, don't have a vested interest in IBM whatsoever. But this line here, more or less where we closed at as on, or really just off on Friday, but coming back down during today's session, is very important for the longer term trend of IBM. And I just wanted to make that very clear as well. All right, so on that note, everybody, I'm going to say farewell to you. Have a good Tuesday evening. And I'll be back with you later in the week for some more market updates. All the best. Farewell.